Welcome everyone to another edition of Endgame Finance. Today I have some exciting news. I actually purchased $25,000 worth of Rivian shares. That's right, $25,000. And today I'm going to go over the reasons why I made this purchase. This is not my largest holding. It's not one of the biggest holdings in my portfolio. If I lose this money, I won't be crying too much. I won't be too terribly off. As they say, only invest money you can afford to lose. I never really understood that statement because I can't afford to lose any money ever. So I don't know who says that, but regardless, so let's get into this, and I'm going to go over the few reasons why I actually made this decision to purchase around 1,300 shares of Rivian for $25,000. Reason number one, Rivian doesn't have pension obligations and they don't have a dealership network that's basically sucking dry all the margins from their vehicles. You can see Tesla has significantly larger margins, and that's mostly because they don't have dealership networks. You just go online, you configure your vehicle, and it gets delivered without a middleman. So that middleman really eats up a lot of margin, and it's one of the things that Rivian or Tesla, they don't really have that. And like I mentioned, they also don't have pension obligations, which will weigh down companies like Ford, like GM, Chevy, Chrysler. So all these companies have tens of billions of dollars in pension obligations. Some of them are well funded, some are not. But it's a big issue for these companies that Rivian and Tesla just don't have those issues at all. Like I mentioned, these products that Rivian is pushing out are going to be extremely high margin. If you just look at Tesla, the problem with Rivian is they still haven't reached scale production. They really need to be pushing out around 100,000 vehicles per year, each single year, just to break even and start to bring in just a little bit of cash in there. But those margins will likely be astronomical, between 15 and 25% once Rivian has reached scale production, and I am betting they will reach that point probably next year. Rivian is also a very well capitalized firm. They have around $13 billion in cash. They don't really have any debt, so I don't see any potential issues with them just raising another $5 to $10 billion in cash if they need it, which I doubt, because they still have the cash, and that cash should last them until they are until they are cash flow positive, which, like I said, I expect to happen sometime next year, and they should have cash to weather these small production delays. Another reason why I'm really investing into electric, I do also have some shares in Tesla as well, but another reason I'm really focusing into electric because I really want to see this change of vehicles towards more electrification, because we need to get a break from basically fossil fuels that are mostly dictated by authoritarian regimes. We need to get away from those things. We need to get away from all the fumes the cars are pushing out into the air. I know I really hate it when I'm driving and I open a window and the fumes are just blasting me in the face. And I can really feel a whole bunch of dust just settling in my throat. And we can do away with that. We need to get away from these dirty polluters. We need to switch to electric. And if for nothing else, just for the noise pollution alone, I mean, these cars are just so loud and they're interrupting our daily lives. They're disrupting our breathing. They're disrupting our basically peace and calm. And that's one of the main reasons why I'm also investing into electric. Another reason why I purchased these shares is because Rivian has basically unlimited demand. There's a huge shift towards SUVs, basically globally, but especially in the United States. So majority of the people that will be purchasing a new vehicle, they will be SUVs, and they will most likely be electric. So we see this combination that Rivian provides that basically gives them unlimited demand in this current market today. Not to mention unlimited demand from their van delivery, because like I mentioned several times in my previous videos, electric vans will be the future. They have to be the future, because regular vans that are delivering packages, they're constantly stopping and going, and this basically destroys their engine, it destroys their transmission, it damages their tires, it damages their brakes, and everything has to be replaced non-stop over and over. But with an electric van, you don't have those issues, because electric vans, they don't have an engine, they don't have transmission. All the braking is regenerative, so when they do actually brake, that power goes back into the battery and powers the battery. It does not wear down the tires, does not wear down brakes. So these electric vans last significantly longer, and they are significantly cheaper to upkeep. I estimate up to 80% upkeep, estimate around 80% lower upkeep, and I base this on Tesla fleet vehicles that are currently being rented by Hertz, and Hertz has announced that their Tesla maintenance is around 40 to 60% less than regular vehicles. So if you extrapolate these facts towards the van, we can see that savings will be around 60 to 80% on just maintenance costs alone. And those two reasons, unlimited SUV demand and unlimited van delivery demand for commercial purposes, those are the things I love about this company. Now, if I'm going to speculate a little bit, I can see this company actually partnering with Apple. Apple electric vehicle is rumored to be last product of Tim Cook, the last product he will oversee before he actually leaves Apple. That is rumored, that has not been confirmed, but Tim Cook will most likely look for a partnership, at least for the initial build-out of their electric vehicle. And I'm fairly certain they are considering Rivian at the moment. And that would be an ideal partnership because Rivian is just building out these factories. Their vehicles are on par with Apple products. Rivian is an extremely high quality product, just like the iPhone. And I can see this connection between Apple and Rivian eventually just merging, and Apple having their initial vehicle production done at Rivian, possibly at their Atlanta plant. So that's one of the things I'm really excited about, because I know a lot of guys will want partnership with Rivian just to use their expertise, just to use their battery production knowledge, and just to push out products as much as possible. Now, I don't see Apple actually partnering with Tesla, because I remember Elon Musk actually, it's rumored that he wanted to be CEO of Apple once when Apple and Tesla were sort of talking about possibly merging a few years ago. The idea of Elon Musk being CEO of Apple did not really sit well with Tim Cook. I'm pretty sure they're still really good friends, but I don't see any partnership between these companies anytime in the future. Like I said, Rivian is in ideal position to take this partnership and just to run with it and to help Apple actually launch their product, which like I said, will most likely be Tim Cook's last product he actually manages before he leaves Apple. So those are the reasons I spent $25,000 to purchase these shares. Like I said, I'm expecting them to reach at least 100,000 vehicles produced next year. If they do not meet this threshold, I will most likely dump these shares. I do not go down with the ship. I will take any leftover cash and just be happy with it. And just to reiterate, I bought these 1,300 shares for $25,000 because I really like the Rivian product. I really see a huge potential in their future, especially for partnerships. And I just think overall electric is the way the world is moving. So I want to be on that ship. Thanks for watching, guys. If you have any comments and questions, let me know below. Like, subscribe, and share. And as always, have a great day.